On paper, Costco seems like a classic Buffett-style company. It's a simple business model, it's beloved by its customers, and it has steady growth and predictable earnings. It's hard to think of a company that Buffett would be after more. Yet in 2020, after owning the stock for almost 2 decades, Buffett sold every single share. The question we should be asking ourselves is why? Why would he sell a business that seems dead set in his circle of competence? And what can we learn about it as intelligent investors? Now, to be fair, Buffett did call it a mistake.
Looking back, he already was aggressive, but I should have been more aggressive in Costco. It wasn't fatal that we weren't, but he was right big time.
But his actions, not only when he sold, but when he did buy back in 2000, reveal some very important insights into Buffett's investment philosophy. And making the story relevant to today, Costco is in the midst of a little bit of a scandal where the FDA has issued its most severe recall over a fear of salmonella in their eggs. So in this video, we'll cover Buffett's history with Costco, why we think he sold, and we'll take a look and see if Costco's a buy today. So Buffett began investing in Costco in 2000 after its stock price fell 37%. The next obvious question is, why did its stock fall 37%? Well, remember, this was in the midst of the dot-com bust, so the market sentiment at the time was very fear-on. But Costco is obviously not a technology company, so it was relatively insulated until Costco missed its earnings expectation by just 1 cent from what analysts were expecting. And this minor miss, because it was such a fear-on environment, caused nervous investors to sell off shares like wildfire. And so Buffett, being the hawk that he is, saw an opportunity. This echoes his philosophy: be fearful when others are greedy and greedy when others are fearful. That's the first lesson we can take away here. Right now, there's no question about it. We are in a period of pure hype on the market. And I personally haven't bought a stock besides dollar cost averaging the S&P 500 since April of 2024. And this is me living in this stuff day in and day out. So remember, just because stocks are so liquid doesn't mean they're little pieces of paper that we can trade around. It's like you're buying a farm or you're buying a piece of real estate. That's the best way to think of stocks. But then in 2020, Berkshire Hathaway and Buffett shocked investors by selling out of their entire Costco position. There are 2 likely reasons to me. First, over valuation concerns. Costco's price to earnings ratio was trading around 35 to 37 at that time. That's pretty high for Buffett's liking, although not impossibly high, where he would immediately sell. But given their slow but steady growth rate, you can see his reasoning that retail shouldn't be trading that high. But the second and more probable reason to me is he has a general aversion to the retail industry, which is funny because he grew up working in his uncle's retail shop. But when you really study Buffett, you understand that one of the key things he looks for is a competitive advantage, a durable competitive advantage, so he can operate long into the future. He calls this a moat, and it's key to understanding Buffett-style investing. And retail is probably the most cutthroat industry when it comes to going after people's margins. I mean, Jeff Bezos once said, "Your margin is my opportunity." Remember, Amazon is a retailer. So Buffett generally doesn't like retail companies. And he does say that it was Charlie's recommendation, which is why he took his position in Costco in the first place. Charlie started serving on the board of it all the way back in 1997, so 3 years before Berkshire Hathaway took their initial position. Charlie really liked Costco for a few reasons. Here's a good clip on why.
Costco, I do think, has one thing that Amazon does not. People really trust Costco to be delivering enormous values, and that is why Costco presents some danger to Amazon, because they've got a better reputation for providing value than practically anybody, including Amazon.
So for context on how slim retail's margins are, Costco's operating margin is 3.65%, whereas other famous Buffett investments like American Express and Coca-Cola have much higher margins. The operating margin for American Express is 16%, so almost 4 times as high as Costco's. The operating margin for Coca-Cola is even more impressive at 28%. So you can see why a higher margin business is much more attractive to Buffett. Now, if we look at Costco today, we can see if it's a buy or not. And I'll be honest, I had a pretty quick turnoff to this. If we look at the current PE ratio of Costco today, it's 55, so it's really, really high. This shows how much of a hype cycle the market's currently in. So even with that 5% pullback, I'm not going to be interested with that high of a valuation at 55 times future earnings. And so I'm holding off for now, but if this egg crisis continues to take over and the stock continues to fall, there's absolutely a price where I'm going to sharpen my pencil. If you want to make sure you don't miss that, please consider giving us a like and subscribe. And if you want to check out my thesis on Costco, you can find that on flankinvesting.com. If you want to check out our next video, where we made a whole video on how Buffett analyzes moats, you can see that now. Thanks again so much for watching, and Happy New Year from us at Flank. 2024 was such an explosive year for us, and we believe 2025 is going to really be our year. Thank you for being here early and helping us build this thing together. We'll see you in the next one.